There we go. What's up, everybody? It is Friday afternoon at 2 o'clock, and y'all know what that means. It is time for Conversations with Rashon. Today, I am super excited. I got my guy, Brandon French, on today to have a dialogue about building credit. What's up, Brandon?
Yeah.
Yo, tell the people who you are, what you do, and what you love.
What's up, everybody? My name is Brandon French. I am a co-CEO of Slaughterhouse Workouts. It's an independent training company that specializes in just making sure that everybody gets their fitness goals and what you want to do, lose weight, gain weight, athletic abilities, whatever you want to do, we're here for it. I also work as a physical therapist aide here in Brooklyn, New York. And I'm also getting my master's in exercise science and rehabilitation from Brooklyn College. So,
yes,
yeah. Yes, sir.
Yo, I'm glad to have you on today, man. But before we get started, I'm gonna jump into a quick commercial, and then we're gonna go ahead and kick it.
All right, let's get it.
We're going to be making a seafood salad. Quick and easy. It's a nice summer dish. One of the important things we want to make sure when we're really busy, like I've been in the last week, you still want to find some time to cook a quick dish that you can go to and kind of just take a couple bites of and get that fuel in and keep going. So here we have the base, where this is extra large shrimp just cut into pieces, cooked fairly quickly in some olive oil, Old Bay salt, Old Bay seasoning, pepper, and some garlic salt. And then you have the pasta, which is fairly done. So you want to make sure that you have some firmness to it. You don't want it to be mushy, because then it's going to mess up the consistency of your seafood salad. So I'm going to take this off. So one of the reasons why I love cooking is because it gives me a break from all the regular things that I'm doing throughout the day. I can zone in, focus in, and start to create something that I know I'm really going to enjoy, especially during a long week like the week I had this week. So today I'm actually cooking pasta seafood salad. I've already coated the pasta with a little olive oil. This is we cut the extra large shrimp into multiple different pieces, so you can see that it's already seasoned and ready to go. So we're going to put a couple different things in here. I have honey, relish, mayo, and a special ingredient, guys, is really going to make this thing kick, is the creamy Caesar salad. And of course you have your oreganos, your parsley, your paprika, and different seasonings. Here's the trick, guys. We're still in COVID-19 season, right? So here are our immune, what I call, ingredients. You have your mushroom. This is very a touch of ginger, and then you have your garlic. These things are really going to help keep your immune system strong. So let's put it all together. All right, and finally, here it is, the finished product, our seafood pasta salad. This is going to make me very happy tonight with a couple fried chicken wings. Look at me. All right, guys. So simply put, if you haven't subscribed to the channel yet, subscribe, because next Wednesday we are premiering Connected Cooking. Yo, this is a huge project that I've been working on. What do you think, Frank? What do you think?
I'm still trying to get finished on that recipe. You said it was fried chicken wings with that oregano. I'm trying to eat that. When are we getting that?
Yeah, that's what I wound up having with that when I cooked it that night. But listen, guys, man, this is a project that I know is really going to help change and shape a lot of what happens in a lot of households. Connected cooking is about connecting family dynamics, fun, food, and finance, having the uncomfortable conversations that we don't usually have around the dinner table, and enjoying making food and putting recipes together as a family. So if you haven't subscribed yet, subscribe, get the notification. If you have subscribed, thank you for subscribing. Thank you for watching. Share this channel with someone else, because October 7th, that's next Wednesday. I can't believe it's already here. That's next Wednesday at 6:30. We are premiering live. I'll be watching live with you guys. I'll be giving out free cookbooks, free t-shirts for those who are watching and participating and interacting in the comments. It is going to be a fun time. So subscribe, share the subscription, get it out to all your friends and family. And we want to enjoy connected cooking next Wednesday. But that's not why we're here today. Today, we're here to talk credit. And I asked my guy, Brandon French, to come on because we had a dialogue a couple of days ago. He's one of my mentees, and we have a really, really good relationship. And he knows anything that he needs, not just in finance, but in life, personally, professionally, especially when it comes to, he's my frat brother as well. I happen to have, let's just say I know how he came in. Let's just put it that way. And we've been connected at the hip ever since. That's my guy. So we had a conversation the other day, and I said, you know what? It just so happens to be that that's exactly the dialogue that I'll be talking about on Friday when we're talking about building credit. So Brandon, let's take the audience back to our conversation the other day. Why'd you hit me up that day? What did you ask me? And then let's go from there.
All right, cool. So once upon a time on a stormy blue night. Now let me stop. All right. So I, like many people, grew up and watched people, with credit cards, and there was some, they were building credit in high school and stuff like that. And I also seen a lot of people screw up their credit in high school and in college, and I didn't want to be like that. So I kind of held off on building my credit until after I got out of undergrad, just so I could mentally prepare myself, make sure that I had some sort of income so I can pay it when I needed to pay it. But now that I'm out, I have a steady flow of income. I'm in grad school right now, so I also want to start working towards other amenities in my life. I wanted to start building my credit. So I guess the first person I thought to hit up would be you, considering that's all you do for the most part. So that's how I got there.
Yeah. So one of the things is so what's the first steps of building your credit, right? So I'll tell you one thing, and if you guys have been paying attention, we just got done an amazing electrifying, there we go, 3-day wealth challenge. And the second day we had Terry on, and she broke down how to leverage credit, how to utilize credit to build wealth. Right. So I'll tell you personally, as a financial planner, as a financial advisor, and for those who are financial coaches, as much as we love to help clients who have bad credit, it's so much easier to start with a blank canvas. So with French, we're talking about a blank canvas. How do you build credit? How do you just get started? Right. So you get one of the things, and in the industry of loaning and finance, meaning financing assets like a mortgage or a car or getting a credit card or a personal loan, they actually say it's worse to have no credit than bad credit. But when it comes to accomplishing a credit goal, it's actually better to have no credit than bad credit, because you're giving me an opportunity to get you started. The only thing that is held against you really is your timeline. So here are some of the major things that are incorporated with a credit score. You have your history, right? So how good are you at paying your bills on time? That's one. The second thing is, how often do you ask for credit? So inquiries on credit. How often do you apply for credit items like credit cards, cars, things of that nature? The third thing is your credit history in reference to the timeline of how long you've had a credit item on your account. So for instance, French, do you have school loans?
I do not.
Okay, so if for instance, if you had school loans or if you had a let's just go with the school loan. So for some of you who have school loans, right, that's been on your credit since your freshman year in college. So that's beginning to build some type of timeline. So for French, who was lucky enough, I wish I was you. Can we switch roles just for a second? Can I go with the zero school loans and you take my 120,000 that I started off with, and then added another 50,000 for my master's? Can we switch?
I'm good. I'm happy with my life.
But in French's case, he's going to need to start from day one, right? So one of the major items to establishing a good credit score, he is going to take time for him and patience, because he's going to need at least 2 years of credit in something before any creditor takes him seriously, which is great that he's starting now while he's in his master's program, because once he's done, he'll have that year or two under his belt, and then he can really start to look to grow, to buy that home, to get that car, whatever, to start that, to get that commercial property for his business, or whatever it is that he's looking to do, right? So the first thing is establish some type of credit account. So what I said to French was, Capital One is my favorite credit card. Capital One has something called a secured credit card. What does that mean? You are securing the amount of credit that you're taking out on something. So for instance, if you get a house, a mortgage, it is backed by the asset of the house. The house is worth $200,000. You got a mortgage for $200,000, right? When you get a secured credit card, you give the credit card company $200, and then they give you a card with $200 worth of credit, but they're holding your $200 as a backup in case you cannot pay your credit card bill. Does that make sense? French, do I still got you there?
That's
good.
Cool.
All right. So the first thing you want to do if you're looking to build credit is to go get a credit account. I'm not suggesting you go to some of these buy here, pay here car dealerships. That's not what I'm suggesting. Those interest rates would be high. I'm not suggesting you get into one of those loan shark companies to build credit, because those things are going to have high interest rates. Your credit card is also going to have a high interest rate, but one benefit of owning a credit card is, with most credit cards, as long as you pay whatever you put on it within the first 30 days of purchase, there is no interest. So you have a $200 credit card and you get gas on that credit card every 2 weeks. You take your debit card and connect it to your credit card, and every time you get gas, you pay the card off. So you get $20 for gas on your credit card. As soon as you get home, you transfer $20 from your debit card onto your credit card account. So your credit card stays at zero, but you're still using it. So now you are establishing great credit habits for the credit companies to look at. Here's another important thing for you when you're looking to build credit. Creditors and people who will finance you for your loans, your mortgages, your credit cards, your car notes, are looking typically for at least 3 trade lines. What is a trade line? A trade line is that credit account, whether it be a credit card, whether it be a car note, whether it be a mortgage. So that's why some people, if they have utilities in their name, would pay an extra fee to add the utilities to their credit. Let me back up. Because most people would say, wait, Rashon, isn't my utilities already on my credit? No. If it's on your credit, that means that it's in collections and you didn't pay them. Your utilities are not automatically added to your credit unless you ask them to. The only time utilities are added to your credit is if you are in default with your utilities. Let me repeat. The only time your utilities are added to your credit is 1, if you ask them to add it, or 2, if you are in default to them. Does that make sense?
Yep.
So what do you think so far, French? Am I helping you out here?
Pretty much. This is everything you told me a couple of nights ago. Question.
Yes.
What would you consider a high interest rate?
So on a credit card, unfortunately, good credit or not, interest rates are between 12 to about 24%. So even if you have great credit, your credit card is going to be about 12%. So there's no good interest rate for a credit card. But if you talk about for a home, right now you can get a home for 2.78%, 3%, three and a quarter. If you talk about a car note, a good interest rate is anywhere between 0 to 4%. In a
Gotcha.
personal loan, anything under 10% with the personal loan.
Got it.
All right. And those rates are really when we talk about people who have anywhere from a 720 or higher. So, typically when you're building credit, fortunately or unfortunately, your interest rates are going to naturally be high. So, French, if you don't mind me asking, what bank do you belong to?
TD.
TD. Okay. Do you have anyone in the family that has been in the military?
Not in my direct family, but I had a couple of cousins and uncles in the military.
The reason why I ask is because credit unions like Navy Federal, even TrueMark, they have great secure personal loans where similar to what I said with the credit card, you know how you give the credit card company $200 and they give you a nice shiny card with $200 worth of credit. With a lot of the banks, and the reason why I say credit union versus a TD or a Citizens or a PNC, because typically retail banks like TD, like PNC, like Bank of America, like Citizens, their interest rates are really high. So you ask me like, what's a good interest rate? For someone who's trying to establish credit and is trying to also build those credit lines, and you're looking for a personal loan to build that credit line, a credit union is probably best because their interest rates are usually very achievable, are very competitive around the rates that we talked about. So the first thing you want to do if you want to build credit is build a savings, because you're going to be shoving out that savings to secure your credit lines as you build. So I would say work to build and grow at least $1,000 in your savings. If you're able to do that, then you go to your bank or your credit union and you apply for a secure personal loan of $500. What will they do with that $500? They will put it in the savings account in your name and lock the savings where you won't be able to touch it. And then they'll give you a loan at whatever interest rate that they're offering for $500. And then you'll take the other $500 and you get a secure credit card. And you're going to give their credit card company the other $500 and they're going to give you a shiny card back worth $500 in credit. So now you've established two credit lines. You only need one more. And we talked about another way to add a credit line. If you pay a utility bill and if you pay it on time, if you don't pay it on time, if you haven't paid it on time, if you're usually late, don't add it to your credit. That's a mistake that a lot of people have been making. All the commercials are coming out about boosting your credit with utility bills. Credit Karma is suggesting it. All the credit card apps, Discover, Capital One, they're all sending you these alerts, right? Boost your credit, add your utility bill, and then you add your utility bill, but you forgot that you was late on it 5 times in the last 12 months, and they put that history on your credit and your credit drops. If you don't typically pay your utility bills on time, and to be honest, if we're living check for check, we usually don't, because that's our variable bill that gives us the flexibility, right? Utilities typically, I'm not suggesting it, but typically if we're struggling robbing Peter to pay Paul, it's the gas bill, the electric bill, the water bill, the cell phone bill that typically takes the hit, because all we got to do is shoot them a phone call and say, I'll pay you on 40 days, or let me go on a payment plan, or I go on LAHEAP, or I go on all these different programs, right? So I'm behind in my bill, but it's okay because they're going to keep my water on, they're going to keep my gas on, they're going to keep my lights on. My cell phone bill is still going to be on, but my payment history within that company is not good. So it wouldn't satisfy me, and it wouldn't be a good idea for me to add those utility bills to my credit if I don't typically pay them on time. But if you do, then you found your third trade. Does that make sense?
Absolutely. So question, how
Yes.
many credit cards would you typically recommend in order to build credit?
I would say start off with one and get used to it. Okay. Once you've had that credit card for 2 years, two things is going to happen, especially if you've paid your credit card on time. One, that secure credit card is going to become unsecured and you're going to be receiving a deposit in your account for that $500 that you gave them. And they will probably increase your credit line. And then two, now you've probably somewhere in the sixes. You won't be in the sevens because you're still establishing credit, but you're probably somewhere in the sixes and you're receiving more credit card offers, but this time it's from unsecured credit card companies. So then you get a second credit card and you look and ensure that you don't have to pay an annual fee to have the credit card. I am a big proponent. Do not get credit cards with annual fees. I don't like annual fees. Why am I paying you if I'm not using the card? Why am I paying you? You charging me $75 every year, and if I don't use the card, now all of a sudden I got a $75 bill at the anniversary of me having the card, and I never use the card. So if the card has an annual fee, chuck it. Don't use it. Don't get it. Don't get it. If you already own a card with an annual fee, don't chuck it, because if you cancel the card, you're gonna, anytime you cancel an account on your credit, your credit score decreases. But I'm talking about, what we're talking about today is someone who has a blank canvas, who's starting fresh. If you're starting fresh, do your best to not get a credit card with an annual fee. Does that help?
Absolutely.
Yeah, so today, again, I'm a financial planner, guys. I'm able to assist in a multitude of different things, but my main objective for my clients is to help you accomplish your goals, your needs, your wants, your wishes, and your short-term and long-term objectives. I am not a direct specialist in credit, a direct specialist in insurance, a direct specialist in investments, but I am proficient and I am a professional in each and every one of those categories because it's what I do for a living. And I spent years studying, getting experience, being trained, and learning about it. But what I can do is I can connect you to a credit specialist if you need credit help. But for people like that's looking to establish and build credit, that's a goal, that's an objective. We can have that dialogue and that conversation just like we did today, just like I did the other day with French. And then we can look and see, where is that connected with your future goals? For French, maybe that might mean because he wants to buy a house once he graduates from his master's. Or maybe that might mean because he wants to purchase a commercial property for his fitness company. We don't know that yet. But you should sit down and identify, what are your long-term goals? And what do you need to do to get to that goal? And it just might be build credit, establish credit, or fix my credit. And if it is, then go to my website and connect with Terry Kauser and get your credit together. Hey, French, before we close out, anything you want to say to the people or any other questions you have?
No, you pretty much hit everything on the mark. I was really curious about credit in high school and college, and I wanted to like fully understand it before I just dove into it and didn't really have a grasp on it. So I feel like this was like very helping in more understanding the concepts rather than, just asking the credit card companies like, hey, so how do you teach me how to do this? And how does this work? So
Definitely.
yeah, thank you very much.
Great stuff. And then also, guys, our first episode of Connected Cooking happens to be around the topic of leveraging credit. So if you want to learn more, know more, make sure you subscribe and watch the premiere next Wednesday on right here on this channel. Okay? But in the meantime, French, thank you so much for joining. If you're looking for fitness tips, you need home workouts, you want to connect with French either online or in person, if you're out in New York with him, make sure you connect with my guy French, okay? And then also, guys, make sure you subscribe to the channel while you're here watching right now. In the meantime, keep your head up, believe in yourself, and remember, you are only one opportunity away from accomplishing your wildest dreams. Talk to you soon.